Hi, this is Ron Janish, and it's 7:55 on the 30th of March. I'm going to take a look at what present positions I have. And remember, I do not take on managed accounts anymore. No more. And let's see what else. So we'll take a look at what positions I have, and you'll notice that they're all different from what I had on Monday. Okay? Because I'm doing something that's relatively short term. And you can simply look over here, and if you see a +1, that means I'm long 1. If you see a -1, that means I'm short 1. And if it says +2, that means I'm long 2. Okay, so we'll just go through the different things that are out there. Here's the Japanese yen. And in addition, and here's the, what is this, New Zealand dollar. In addition to just going through these here quickly, what we're going to do is go over a couple of important features. One of them is showing you something that's exactly what's in the expanded course. So you'll want to see that, and also we're going to talk a bit about objective function, okay, and how Andrews did that. See, here's gold futures for April, nothing. For June, let's see, it says PL day, which means I got out of a position, and PL opened down 20. Oh, well, this is long 1. Okay, well, now it's, yeah, fluctuates. Okay, silver, out of there, out of there. 0 on position. Bonds, out of there, 0 on positions. And soybean oil futures, looks like I'm long 2. Okay, so now that we have that out of the way, let's move on to a couple other things. One is, if you're absolutely brand spanking new to this, if you go to Traders, no, you go to Babson Trading, babsontrading.com, you can click on a link there which will get you into the email group and get you the free emails that we send out once, twice a week, or 3 times a week. And we moderate the group. You can ask questions. We moderate it so that people aren't adding commercials about Viagra. Okay. That's number one. Number two, if you're interested in taking the course, please go to andrewscourse.com, and we're going to take a look at what's in the expanded course today. And without any further ado, we'll take a look at that here. But before we do that, we're going to take a look at a concept called objective function. Big word, big word. Don't worry about it. Don't let it drive you crazy. That's my motto on this. Okay, let's take a look. This here is a historical study we did using the software that we developed for Felipe, and if you'll notice, it has all kinds of interesting facts. And let's see if I can move this up. Can I move this up? No, not really. No, I can move it down. Okay, and it'll have all kinds of interesting facts: annual return, net risk adjusted return, and all this kind of stuff. And this is what's called the objective function. And the idea, I guess, is, there we go. That helps. The idea is that people can then look at a system and make a determination as to whether or not it's one they want to use, or have some of these things as goals along the way. For example, some people I know only use systems that have a Sharpe ratio over 2.0, and this has 3.87. I guess that's a good number. And then another thing that they look at is, what's the maximum system drawdown? Here it's 5.59%. And CarMax DD, which is calculated annual return divided by maximum drawdown, is 9.85. I guess that's also a decent number. So anyway, that's the objective function. Now, Andrews had an objective function that he used. And I will tell you that by using his objective function as explained, and he goes into detail, he does not use the words objective function. In the expanded course, it makes this a lot easier. So if you're using the Andrews expanded objective function, you won't be looking at Sharpe ratio. You won't be looking at here we go, bring this up. You won't be looking at Sharpe ratio or payoff ratio or profit factor. Profit factor of 12.09. That's not bad. And all these other things, and you just won't be looking at that. You'll be looking at the thing that he suggested people use and focus their attention on. And so if you go in the expanded course material, you'll find that. Okay, and you'll find that he talks about that in the early 1970s. Okay, so as you go through there, just look and see what does he use in order to determine how well he's doing. That's what people use this kind of stuff for. Okay, so let's move on to showing you an actual page out of his expanded course. Here we go. There we go. And this is an actual page, and this is his weekly course letter of 531.71, and this actually has a lot of information. You got to go through it, and you'd see some interesting things. For example, he says here there's a high probability that there will not be another gap on the price of bellies Monday, because when reaction lines converge on price, it nearly always means a pivot with a change in trend. Ah. Now notice that nowhere in his rules or his concept does it say that, except for here in the expanded course material. Okay, and that's the really neat thing, is that you get to see his actual writings, all that we have. We sent them out to you, and you get to see his writings and his comments on the market, and it shows you his logic as he's doing it. And what you'll find is that it's very different from the rules he put out. The rules he put out are just, nowhere do you see stuff like this in the rules he put out. So, and then he has some other things in here that talk about gapping warning lines and things like that. And so let's see if I can bring this up. No, I can't bring this up. Okay, so and what's fascinating to me about this is that in this newsletter here, he has this thing called orders indicated. And what you do is you pick, when you get this in the mail back in 1971, because they didn't have email then. Okay, and when you get this in the snail mail, you just pick up your phone and call your broker, and you would read to him pretty much orders indicated. So take profits on Dees cotton at this price here, and let's see, cover short on corn at 43.5, stuff like that. And I've had questions that said, wow, I've seen Andrew's material and it looks like he only had winners. Well, I wish that was true. I really do, but it's not true. Result of past week, losses of 10 points on the bean oil, sold as indicated at 10.94 Wednesday close, loss of 3 points on the June cattle, and then he goes on to the other things where he has present positions. Okay. So he did have lots and lots of winning trades in his weekly newsletter, tons, but once in a blue moon, there would be losers. And he was not a perfect trader. So you know that. Anyway, here's the deal on the expanded course, in case you don't know. The price on this varies, because the more we sell, the more the price goes up. And if you go to andrewscourse.com, click on the products page, and go down the page, you can see some videos of exactly what the written material looks like that you get. Now, in addition to the written material, you get tons and tons of videos. And a lot of the videos have to do with the research that we've done, and some of that research that we've done deals with the expanded course material, and some doesn't. It deals with Andrew's concepts in general. So that's what I got for you. And I thank you for your time, and we'll see you next time.